Good day. Ira Epstein of Linn Associates with your agriculture wrap-up for this Wednesday, and we're at the 23rd of October, 2019, 2 p.m. Central Time. So as we're looking at the markets, a mixed day in the grain market. Your cotton was up a little bit, mixed in the beans and the corn market. We saw the meat markets take off to the upside, and one of the important events today, to me at least, was how the pork came down, hit the lower Bollinger Band, and snapped right back to the upside. Why don't we go take a look at those markets? As we take a look at soybeans on a weekly area chart of closes, I determine a bias in the market when I'm looking at charts, be it weekly, daily, doesn't matter the time frame, quarterly. When the market is over an 18 period, and that would be of, in this case, the weekly chart, I say that the bias is to the upside. When it's under it, the bias is to the downside. In addition, when the market stretches itself, be it to the down or to the up as it's doing, on pullbacks, I'd look for the 18-week average of closes to be the support, and when you're under it, for that market to be the resistance. So I'm saying the bias is up. When we look at a daily bar chart of just the action, not closes, just the action, you can see how you're caught between 945 down to this 926.27 area, just sort of hanging right there. When I put the swing line on, which is a study I wrote, so that I could easily see is the market trending according to my rules. My rule of trend is if you're in an uptrend, you have higher lows and with it higher highs, as you can see. In a downtrend, lower highs, lower lows, and no trend has in some combination a higher high and a lower low, but they're not stepping ladder impacts at all. This is an uptrend until the market takes out 927 and a quarter. If you look at today's low in the market, it was 927 and 3/4, wasn't able to get through that. So the trend is still up according to the swing line. I then put moving averages on the market. Now I used 3 of them. I used the 18, the right here is the gray, the 200, and the 100. And ideally, when they're stacked in a bullish formation, you have the shortest term, the red, and right under it, the 100. It's not underneath the 200. But that's still, what you had was a crossover back here, and the market has stayed bullish. Now, one of the things I look for is support, which I'd say is right here. And if you take a look, we can go back a day at a time. Yesterday, that number was 922, day before 920, day before that 917 and a half. So it's moving at about 2 cents a day. And you certainly today with a 1/4 cent change aren't going to impact that average very much as you drop one of the days back here and replace it with the current value that was very similar to yesterday. So I'm going to say this market's going to jump up very close to this support at 927 and a quarter. When I look at the market, I look for resistance as well as moving averages. And in this case, the averages, since they're all below the market, are support. The resistance will be the upper Bollinger Band. Now, markets can run on resistance, but generally, the word is generally, the first time you get up to this point, it reacts from it. That doesn't mean it always happens, but more times than not, you can go look at your chart and you'll see that that is the case. Sometimes you just stall, other times you get a big reversal from that. We'll see what it does. Another thing I look at is where's the momentum. And going back here, you had what we call an embedded reading that when the first time the market closed back under an 80 level, notice how these numbers were all over 80 back here. When that occurs, it often leads to price and the 18-day average making a run at each other. So here we are at this point when the market's 928, and what's actually happened is that's not the case. What has happened is the average is moving up, but price is stalled out. And as it's stalling out, the support's moving to price not falling down to that. Little difference that it's doing here. That does not mean that I still don't think price in the 18-day average will hit. But instead of looking for a big break, it seems to be a whole different play that's at work right now. In the meal market, we have a pattern of lower highs, lower lows. So that's a downtrend. The market yesterday made an attempt to get to the 18-day average. Didn't do it. It did it today, and then from there it bounced. So you can see near-term resistance is the 100-day average because you were under it. On the way up, The average is the opposite. It's resistance point along with the Bollinger Band, and you can see what the market's done. So it's playing its game there, back and forth. At the same time, momentum, which had gotten itself into overbought territory, has fallen back quite a bit here. That's interesting to me as well. We'll have to see what that's all going to do, but I'd call this market neutral right here. The market that has been bullish has been the soybean oil. It rallied. And as we can see here, yesterday it got up to 3,100, which was the upper Bollinger Band. You challenged that again today and lost back of that gain 27 points because that's a resistance area. But what this market's trying to do is embed. It's trying to convert itself from overbought to locking in an uptrend. Got to wait and see if it's really capable of doing that. We'll know more tomorrow. In the corn market, this correction that's going on is between these black lines, the Bollinger Band, top and bottom. Remember, the idea of a Bollinger Band is the market will trade within it 95% of the time. That is not to say you can't get to it and the market runs under it. That can happen very easily. But 95%, and that's a big percentage number, it's going to trade within it. So when we get up to it, I think the pros use that number as a resistance point. As it turns out, the market is rolled over. It has a pattern of lower highs, lower lows. As you can see, stochastics are pointing down. The bias is down because you're under the 18-day average, and support's going to move right up to prices here as the Bollinger Band is moving to the upside. It's probably going to be even a bit higher tomorrow. You're getting into this narrow area right here during harvest. Interesting, because you're not getting that big harvest breaks traders so often look for. In the wheat market, you had an embedded reading back here where the numbers were going sideways over 80, and it's lost it. As it's lost it, we're getting back into a support area that could develop at the 18 to the 100-day average of closes. When you lose this momentum, just like in beans, my filter says, nah, you shouldn't be aggressive on the buy side of the market. What you do with that is you're not bearish either. You're looking for prices to come down into a support area. We'll see if it doesn't. Either way, the market has to work out, in my opinion of charting, an overbought condition. I'm not bearish. The question is, am I bullish? Sugar. This is called running the lower Bollinger Band. Now, we'll see just how much it does it. I was just reading an article out of Brazil as to how much ethanol they're making, and they're taking 2/3 of their sugar crop and making ethanol because sugar prices are so cheap right now. They don't want to turn the crop into that. I find that fascinating because down the road, less supply will be helpful to the sugar market form a bottom. We keep coming down. The trend is down. The market's oversold. Could embed, but not there. And it's running the lower Bollinger Band. To tell me that the market's trying to make a bottom, you got to get over the last rally high of 1239. In the coffee market, we've had a heck of a spike. Today, you gave back 115 points of that. I wouldn't be surprised to see the market try to fight at that 18-day average to figure out what next. At this point, the trend is up. You have higher lows, higher highs. The bias is up as you're over the 18-day average, and I had my brain ahead of me, and the momentum is up as well. In the cocoa market, we are still in a market that I am convinced nobody knows what to do with. And that is because of what Ghana has done, the Ivory Coast, in creating this fund to try to figure out for the people, the farmers there that raise the cocoa, a certain amount of the crop sales have to go to that, but the commercials haven't learned how to price that in. There's a lot of confusion. So they've been taking cocoa out of warehouses rather than buying fresh. I don't know if that's bullish or bearish. I see a market that's caught in this sideways action. I understand what's got the market confused. I wouldn't know how to work with that. In the cotton market, overbought, higher lows, lower highs all of a sudden. I see a market in a pause stage. I'm going to give the benefit to the bulls still until you take out 63.96. Take that number out, and then you'll have a pattern of lower highs, lower lows, and maybe the market makes a run for the support at the 18 and the 100-day averages. If the market wants to run up here, resistance, the upper Bollinger Band, and it's been showing itself to be pretty good at that. In the cattle market, right on up. Market had another outside day up. What has been prevalent? The embedded slow stochastic. When I see that on a chart, it tells me, nah, on the breaks, the pros are going to be constant buyers. They're looking for a market to get up, as I teach in my morning subscriber video, a window envelope or a Bollinger Band. In this case, it's the Bollinger Band. You missed it by 2 ticks. The market got as high as 115.45, 115.50 is the number. You're knocking on the door. This is a breakout again to the upside in the feeders. What you don't want to see is yesterday's low of 138.65 taken out, but it's reasserted itself. All that we really did is we had lost. We had an embedded reading. We lost it. Like in beans that I was talking, often that leads to a coming together of price in the 18-day average. It didn't do that. Market just backed off right here. We'll see just where it wants to go. You can see how it got back to it. That was the target, just getting there. In the process, you had a higher high, lower low. The market played around, as I often say, it's going to play around that 18-day average, the line in the sand. And if the market starts following through, watch out, and that's exactly what happened today. You got your follow through again. Last, in the hog market. You've been in a downtrend. You had yesterday even a failure against the 18 and the 100-day average. Trend down. What you don't want to take out, and I'm sure I said that yesterday, if you take out the highs of Tuesday, be careful. What's the downside target? The potential of the lower Bollinger Band, the momentum down, bias down. Market makes its run today, gets literally to that number, got under it by 17 points, reverses, and closes up on the day. I'm not saying the trend has changed. I'm saying it hit a downside target and it found support. I talk about this and a lot more, and I do it in a way that you might like. I'm now back into the mode where I'm starting to do all of my different grain reports, my meat reports, and I'm looking right now at my data to see which report I might do one as early as tomorrow. And how I do these is different. I give you an idea of what the seasonals are doing, just like you're seeing on my gold and silver here. I did a silver report that's still up on the website. And then I look at longer term charts, then I'll go to the shorter term charts, and I try to give you a guide path as to what the seasonals are showing and so on. I'm certainly looking at this grain market right now because we're in harvest, and there's a term I look for. Harvest lows. I don't know where they're at. I don't know when they're going to show up. Harvest lows. So for those of you there in the metal markets, I'm looking at the silver right now because it's at a very interesting spot. My reports only stay up 5 days on my website. I put up the silver report, I believe it was Monday. It's probably going to come off over the weekend. So if you'd like to take a look at it, go to our website. Under research, you'll see Ira's silver report. Take a look at that. You can always call my staff to help you. And if you're watching here on YouTube, simply click right up here. It'll take you right over to that area. If you'll see an icon on YouTube, it'll take you right to the area you need. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.